Hello, I'm Jerry Willis, and this is Open House, the show that saves you money. It's been a big week when it comes to you, your finances, and your home. The Federal Reserve cut a key interest rate 0.5 percentage point. The stock market reacted positively. But some are saying it's too late to save the housing market. Others are saying it might have actually made the problem worse by encouraging reckless lending. Foreclosures up big time, 36% from last month and more than 100% from last year. That according to Realty Track. The forecast is for more than 2 million, that's right, 2 million homes to go into foreclosure this year alone. And even if you aren't facing foreclosure, the future value of your home took a hit. MoodysEconomy.com reporting nearly 3/4 of housing markets in the U.S. will face declines in value over the next few years. That's New York, Los Angeles, Philadelphia, Phoenix, San Diego, Detroit, all on the list. Okay, it's a lot of information to digest, and it probably has you asking the one single question that everybody wants an answer to. What does it mean to me? Here to help, Bob Moulton is with Americana Mortgage Group, and Peter Schiff is the author of Crash Proof. Thanks for joining me, guys. Appreciate it. Let's start with that Fed rate cut. You know, big surprise for so many folks out there. I know few people, let me put it that way, were expecting 50 basis points. Peter, tell me, what does it mean for the economy?
Well, the economy's in trouble. The rate cuts aren't going to do anything about that. Real estate prices are still going to fall. They're going to fall sharply. Credit is still going to contract. It's going to be more expensive to get a mortgage, not less expensive. You know, in order to borrow money, you need to find a willing lender. And for years, we've been borrowing from abroad. But we've stuck foreigners with tremendous losses. You can look at those lines at Northern Rock in the UK, and the dollar, since the Fed cut rates, has fallen through the floor. And there's no way people in Europe or Asia are going to want to lend Americans money to buy overpriced houses at 6 or 7% with the dollar collapsing.
Let's get back to the domestic situation for just a second, Bob. The economy clearly in trouble here. Let's talk about the impact on the housing market of the Fed cut.
Well, the Fed cut is one component to help the housing market. You also had builders slash prices this week. You have banks helping homeowners to try to salvage the mortgage that they have. And you also have FHA reform. So this is one effort among many that's trying to help homeowners in the country right now. The drop in the 50 basis points by the Fed will help anyone that has a home equity line of credit. It's going to help someone who has credit cards or possibly an auto loan. Where it's also going to hurt someone is someone who's looking to save money, and they're going to get a lower yield on their money market account.
There's a lot of impacts.
But also, you know, the inflation that the Fed is creating to try to socialize these real estate losses is causing other prices to rise. People are going to have much more expensive fuel bills next year. Wait till people see how much it costs when they go to the supermarket. The Fed is creating a lot of inflation. And, as you know, long-term interest rates are actually rising now. So in a few months, I think you're going to see interest rates a lot higher than they are today, and that's going to be more expensive for people trying to refinance. No.
I want to ask you, too, Peter, about, the Democrats in the House this week passed a bill that would give the FHA even more reach. The FHA could insure loans up to over $700,000. Is that a good idea?
No, it's just taking overpriced homes and trying to put the American taxpayer or holders of U.S. dollars on the hook. Real estate prices are too high. They were bid up to bubble levels by these lax lending standards. They have to come down. Unfortunately, a lot of people are going to be disappointed to find out that there's no Santa Claus, that they've lost their home equity. But efforts to artificially levitate home prices are doomed to end in disaster.
So you are anti the bailout. Bob, what's your view?
I think it's going to help. I think that the market will self-correct itself. Volatility in real estate prices is not necessarily a bad thing. Places that have gone up very quickly will come down. Places such as Florida, maybe in Las Vegas, Nevada, where there was overbuilding, there was cheap money. We had a 1% Fed funds rate. We had a 4% prime in the beginning of this millennium. We had new products that came out. We had people going from the dot-coms into real estate. You saw the dot-com come down. Now you're going to see real estate come down. That's going to open up doors for first-time home buyers.
Yeah, it's all like the NASDAQ all over again, isn't it?
But remember, those home buyers are going to need 20% down payments, and they're going to need to, and with our savings rates so low, it's going to be very difficult for people to come up with these down payments. I think more people are going to end up renting houses that Europeans and Asians and Canadians pick up at fire sale prices with the falling dollar and then rent them back to poorer Americans.
That's depressing. That means, less wealth for Americans. But Bob, let me get you to some real advice here. For people out there in the markets right now, is now a good time to borrow, or are the mortgage markets still so seized up that they really don't want to lend money?
Well, what's happening right now is, as you know, lenders look at 4 different categories. They look at income, they look at assets, they look at credit scores, and they look at property values. You're going to have a much better credit score today than you did 6 months ago. You're going to have to come up with a traditional down payment of 20%, which maybe you didn't have to 6 months ago, where you could get 100% financing. Those people with the down payment, maybe they can get a gift from family because there's a lot of wealth in the generation before us. They can help the people looking to buy a home. So we have to get back to basics right now.
Well, get back to basics, but what if you're one of those people who's stuck in one of those adjustable rate mortgages, one of those toxic loans where, the terms were really onerous? Are you going to be able to get that new loan, Bob?
Well, here's where the FHA is going to kick in. And if those people cannot go back to the lender and get a workout program with their existing lender, they might be eligible for an FHA reform loan. So it is available to them. They're going to have to take a look, consult with their attorney, consult with the lender. But there are possibilities to bail these people out that did get involved in terms of a toxic
most of
mortgage.
these people aren't stuck. A lot of them have no equity in their homes anyway as far as down payments, or if they put a down payment, they've long since borrowed it out. All they got to do is mail the keys into the bank. There's plenty of houses on the market to rent. No one's going to be homeless. Nobody is stuck. It's the lenders that are stuck.
People might be homeless. I think we're starting to hear reports already of people.
Homelessness.
It's not good news.
You have foreclosures up 115% from prior year.
But they're up
36% from the month
But
before.
when they foreclose, they're not on the street. We have a record number of unoccupied homes. People have plenty of places. No, the rents are cheap. I'm renting myself, I know.
I'm going to have to let you go there. Thanks for helping me out.
Thanks for having me.